So it looks like the numbers are slowing down now, and I think folks might still join us a little bit later, but it seems like folks who are here. So I want to thank all of you for attending this digital workshop, and thank Chazen & Company for putting this on. I think it's during these last years, it's been sort of invaluable to be able to have access to experts in this way. And so we're really grateful to Karen and Martha for being here. And they will also be with us in Jacksonville in March, from March 8th to 11th in the exhibit hall, so you can meet them in person when you come to the conference. And so Karen, Martha, I hand it over to you.
Okay, Peggy, just a quick housekeeping. I'm getting notes saying that the chat is not enabled, so that people are not able to type their comments in the chat.
All right, let me figure that out.
Okay, so while Peggy works on that, I will we'll start sharing some information with you all. Thank you again for spending some time with us this afternoon. Our topic today, just to make sure you're at the right place, is how to manage your funds, right? So you've got different types of funds that you are stewards over at your different parishes, and we want to try to simplify the accounting for those, because I know it can be a little overwhelming. If I've never met you before, I'm Karen Sprague, and in my past life, I was a director of finance and administration for a larger Episcopal church, and so I will speak to some of my personal experiences. And Martha was actually the manager on our account at Chazen & Company, so she and I worked through this quite a bit. So we have a lot of information to share with you, and we hope that it will be helpful. So I'd like to just start with getting to what the end goal is. By the end of the webinar, we hope that you'll be able to learn, you will have learned how to properly track and report on your different restricted and designated funds, that you will know what policies you want to have in place for those donors, and also to make sure that they are available to the donor. You know, just a tip for you might be, you might want to think about putting it on your giving page where you start talking about giving, things like that, so that it's accessible to donors. And then lastly, what are some internal policies and procedures that you should be thinking about to manage the funds internally to ensure that they're being managed correctly? So with that, let's just start with basic definitions, and we will dig deeper into all three of these. So we'll start with the obvious, the unrestricted, and that is what most of us know. Those are the funds given to us by donors, where they're not telling us specifically what we're to use those funds for. The other one is the board designated fund. Those are other funds that are not restricted again, but the board or vestry designates what the use of those funds will be. And donor restricted are when donors give us donations and they come with an attachment of either a time and or purpose for use of the funds. So like I said, we're going to get into this a little deeper. I'll start with the unrestricted. And as I mentioned when I first touched on it in the prior slide, all parish and church contributions are either donor restricted or without donor restrictions, or in other words, unrestricted. So again, I write you a check for $100 and the memo line does not say that I'm telling you you have to use it for certain event or ministry, etc. There's no strings attached. Typically in a parish setting, your annual pledges are considered unrestricted. And when you develop your budget, you let your congregation or parish know how those funds are going to be used to run the church's operations and provide what the different ministries need. Gifts, so you pass the plate around on a Sunday. Those are not usually tied to a specific request, and those are also considered unrestricted. A note for you just to keep in, to consider, when you have an event, for example, let's say you have some sort of an event for, wine and cheese, let's just say, at your parish, and you're charging $50 per person, and you're planning to use the proceeds for some sort of ministry, whether it be, let's see, a homeless program in your city. We would recommend that you decide to designate those after the event occurs, because you may end up with perhaps more funds than you originally thought or less funds than you originally thought. And as a team or as a vestry, you might decide, we want to use some of this money to help another group. But at the same time, you've just told those attending that you're going to use them for something else. So you want to make sure that you stay true to what you share, what you market, what you sell as the reason for the event. And maybe it should just be, you know, a fundraiser for missions, and then missions goes off and determines what it's really for. So just a little heads up on that, wanted to share with you. And now I'm going to pass it over to Martha for your donor restricted and other funds.
Okay, so as Karen said, a donor restricted gift comes with strings attached. So the donor tells you how they want the funds to be used. And that can be either for a particular program or in a particular time frame. So there's really two kinds of donor restrictions. There's what we call purpose, so what they want their funds to be used for, or time, which is when the funds can be used. Or if they give the funds over time, you can't spend them until you have the money. So by the nature of it, they are considered time restricted. And these are really technical definitions that you see sometimes on audit reports or in other reports, but it is important to know what it means to be donor restricted and the various ways that you can restrict funds. So say you get a gift that's for next year's operations, but you got the gift, 10 months early. Well, until next year happens, that fund is technically time restricted and should be reflected and treated as such, and not spent on this year's operation. Okay. The other thing that, many of you are used to is the terminology endowments, which we're going to go into the specifics of here. But the endowments are much more restrictive, and typically they are to permanently fund a program. Therefore, you're restricted to using only earnings or only using a certain portion of the endowment funds in any given year so that those funds will last. Perhaps into perpetuity, but certainly for a long time is the intention of an endowment. And the rules around endowments are much more restrictive, so lots and lots of documentation. So let's talk specifically about endowments. There are really two kinds of endowments. There's what we call a true endowment, and that's where a donor or a group of donors gives you money to fund a particular program. So it could be, scholarships, it could be a feeding program. But the intention of an endowment is that it will, like I said, over time, it'll continue to produce funds to be used for those purposes. There's another kind of endowment, and many of you probably have this, and you call it your endowment. And that's what we would call a quasi-endowment, which is funds that were not endowed by the original donor, but there were some funds that were set aside for an endowment-like purpose. For example, if you have a parishioner who passes away and there are funds left to the church in the will, but there's no designation in the will how those funds are to be used, but it's a large chunk of money and it was a surprise, you didn't know it was coming, for example, then the governance may decide this is a perfect opportunity for us to establish an endowment. So that will always be a quasi-endowment. It'll never be a true endowment. And the only reason it matters is because you cannot permanently designate funds for any purpose. Designation by its nature is temporary. So if you have this kind of endowment, you could have a new board and a new minister come in, say, 5 years from now and say, we'd really rather do something else with that money. And according to the, I'm not saying that would happen necessarily, but according to the rules, it could happen. So the permanent nature of it really goes away when you have a quasi-endowment. But the fiduciary responsibility governed by laws requires that you have to develop formal spending and investment policies for your endowments. And those policies are supposed to be reviewed on an annual basis. So again, this is not governance that's set by the parish itself, but these are actual laws, and this law is pretty much the same law in every state in the US. So the policy should include how the earnings are restricted. For example, all the earnings are available to support the program. 4% of the corpus value of the endowment is available, something like that. And so that makes it clear that the corpus of the endowment will never go away. And then also if the donor had a specific intention about how the endowment would be used, how the earnings would be used, that should be documented, and that should be followed in the case of any particular, that a donor intention would override a church-wide policy on endowments. Okay. You want me to keep going, Karen?
Sorry, I'm responding to a question. There is a question though, if you would speak to combining very similar true endowments into one, is that something you can do?
It would depend on the agreement that was made at the time the endowment was received. So if it is an endowment that comes from a live donor with a specific agreement, then the intention would have to be the same, or you would have to go back to the donor and ask them if you could combine those two to a like purpose. So that it just becomes kind of a technicality. A lot of times you cannot go back to the donor, and then there are ways to do this legally if you're trying to combine them. But it really, like I said, if it was, a general endowment to support the youth programs at the church, and you get another endowment to support youth programs, those could be put together. But if it said youth programs to be delivered in, such and such an area of the city, and the other one, didn't say that, then you would have to be careful about that. Okay. Hope that's helpful. You want to take this one, Karen?
Yes. So another type of donor fund is board designated. So for example, a lot of you probably have buildings or plants, you probably call it plant in your budget that you manage. And so your vestry decides, we think it might be smart to begin setting aside a board designated fund to help offset the costs that our parish may incur, as a result of, let's say, a chiller going out or a boiler going out or a roof needing repair, etc. The vestry can come together and take undesignated funds and say, we're going to create a plant maintenance fund. And you, as those that are overseeing this, would want to strongly encourage that the purpose for this fund be notated somewhere, so anyone can go back and know why this was set up, and to have a good understanding of what the reason is for it, what the purpose of the funds are. And you want to be sure that as you set money aside for it, you're putting that as part of your budget, right? We're going to do $10,000 a year to fund the board designated fund to help with plant maintenance. So that's an example of a board designated fund. It's important to, if you can, make sure there's shorter term basis. Now, plant maintenance one, perhaps that's not realistic, but any other funds that are designated by the board, you might want to try to keep to short term. And maybe pre-agreed release or redesignation dates for any of those unused funds. So we're going to create this board designated fund, and if in 24 months the funds have not depleted, then we're going to have a discussion about it and either redesignate or release them back. Okay. We also think it's important for vestry, finance committee, and church leadership to review the funds and make sure that you keep tabs on why you have them. Do you still really need them, and do they need to be released back? So anything else, Martha?
just to make sure that we continue to reinforce that a designation is by nature temporary, and a change in leadership can, you can undesignate funds as easily as you can designate them. And the process for designation is really a parish specific kind of governance. So if the finance committee, for example, is given governance over the designation of funds, or if it's the vestry, it depends on, how it's defined within your parish. But the same group that's given control to designate has control to undesignate. And that's why part of the reason we suggest the shorter term nature of these is because these can be specific to what's going on in the world, and then that's not going on anymore. And then you're left with this fund and you're like, what do we do with this? Well, you can take it and move it to another cause that's happening, where there's been a disaster or something like that. There's a lot of flexibility here. Less flexibility than over truly unrestricted funds that have not been designated, but there is a lot of flexibility, and you just have to make sure everybody understands who has the flexibility to make these changes. That's important. And I would encourage you, and you'll hear it over and over again today, just write things down. That's just what's really important, and put those writings in places where people know where to find them. You don't want to find something put in the vault and only 2 people have access to the vault and they don't know what's in there, or, wherever you're storing, important things. You need to make sure that these things can be shared because it's important.
Martha, I've got a few questions I'd like to run by you if you don't mind addressing them. The first one is, must 2 designated donations be saved in separate asset accounts, for example, bank accounts, or can they be combined in a single asset account but tracked in different funds?
So they can absolutely be combined in the same bank account. And in fact, we would encourage that to be best practice. Restricted funds can be commingled as long as there's an understanding of how the earnings on those funds will be shared. And that's something that you want to write down, and you want to have an internal procedure to make sure that those allocations are done correctly. The reporting for funds is not banking. It's really keeping track of the funds. So if you think of a balance sheet, funds are on the right-hand side. They're not on the left-hand side where you see your cash accounts. So I would strongly discourage you from opening a new bank account every time you have a new fund, even if it's restricted. You can keep track of these things in your accounting system. You don't have to keep track of them at the bank. It just causes extra fees and extra work for everyone to have multiple bank accounts.
Okay, another question is, can other donors give to an already existing fund established by a single donor or bequest?
They can, yeah, you can do that. And those can be done over time.
Is an endowment the same as a trust? That was a stumper. You want to come back to that? We can.
Yeah, I think we're going to have to answer that one virtually, but it's a good question, but I can't answer that off the top of my head. Sorry.
Okay.
It's a little too legal for my accounting side of things. So.
I will notate who asked it, and we will get back in touch with you. And then the last one, sorry, the questions are coming in and they're good, so I want to tackle them as they come. If someone says to establish some kind of fund, but only says for growth, community projects, feeding the poor, etc., what does that mean? Different vestries come to the table with different understanding.
So I take it that this is something that's been restricted by the donor, but the language in the restriction is vague. Is that, Karen, is that the way you're reading that too? Or
well, for me, it's more like, I don't know, Bob, this is your question. If you want to chime in further, you're welcome to, but I'm just saying, if someone comes to the table and says, we want it to do for this purpose, what does that mean for each different parish? And what I would say is, from my past experience, if someone came to me and said that, and I didn't have a specific fund already established for that, I would ask specifically, what are they planning to use those funds? What do they want us to use those funds for? And tell them kind of what funds we already have, and does it fit in any of those?
Yeah, absolutely. When you have when you have a live donor and you have vague language, you just ask for clarification because you don't want to be put in the position of misinterpreting this and then get yourself into trouble or mistrust because you didn't handle it as you should have. So if you don't have a live donor and you're trying to interpret language that's big, then that's when I would make sure again that there's a lot of documentation around it. And you may want to even ask legal counsel, what to do in a situation like that. You can also talk with an auditor, but really, if you've got the opportunity to ask for more clarity, it's really the donor's intent. It's not the parish's intent or the parish's interpretation of the language unless there's no one else to interpret it. So it is important when you have a live donor to just speak to them and say, let's just break this down a little further and to try to get that in writing if you can, because that's just better for everyone.
Okay, just a quick note for everyone on the webinar. I've got other questions about trust versus endowment. So instead of just sending it to the one individual who wanted the answer, I'll go ahead and send it to EPN and have them send it out when they send the PowerPoint presentation to you all. I have another question, but I'm going to go ahead and let you keep rolling a little bit and then I'll come back to it. So if you want to talk about this, that's great.
Wait, want me to do this one, Karen? Okay, so think about what policies and procedures you may already have in place or that you need to put in place to manage your donor restricted or board designated funds. So first and foremost, a gift acceptance policy is such an important thing to prevent confusion going forward. Your policy can, speak to the size of gifts that can actually be restricted. What you don't want is, $25 gifts that are restricted because you have to track a $25 gift like you have to track a $25 million gift. So oftentimes, the church will actually restrict the size of a restricted gift that they will accept. You can also, you want to make sure that everyone understands the restricted funds that you already have, and if they have the same intent with their gift, that those can be combined, as we discussed earlier. The other thing you can do in a gift acceptance policy, as long as the donors are advised of this over and over again, I would suggest that small residual balances, and small is certainly open to interpretation, but so don't use the word small, call out the dollar amount and say, anything below $250 will be combined in with unrestricted funds for the general use of the parish, or it will be combined into, the social action fund or something like that, because it's where funds get to be messy and get to be hard is often the small dollars. And you'd really rather have your accountants focused on reporting on the parish than reporting on all the $25 funds you have. So this is something that's really important. And you can put, like I said, you can put things into your gift acceptance policy. It needs to be adopted by the vestry, so that's important. But that, and again, you want to communicate widely what your gift acceptance policy is so that there isn't any misunderstanding and you don't have a situation where a donor said, well, you never told me that. You really don't want to get there. Capital campaigns are kind of a whole different animal because the dollars are big and they tend to be done over a period of time. I think that you've probably all seen a capital campaign that's been going on. You finished it 10 years ago and you're still getting a donation to that capital campaign that's coming in every month. And what do you do with those dollars? And again, one of the things for sure you want to do is you want to make sure that the time parameters are spelled out, and if they're flexible, that they're updated as the campaign changes over time. And you also want to talk about what you're going to do if you have anything left over. Are you going to go to the donors and say, do you want to redesignate, do you want to restrict this for something else, or do you want your money back because we didn't use all of it? How do you decide how to do that? So I think most of you, when you start capital campaigns, you have professional fundraisers involved, but I just want to make sure that the documentation is really important, and the time and the residual are two things to really focus on.
Martha, we have a question. If the donor and heirs have passed away, can the vestry decide what to do with the remaining monies?
Technically not, but this is where you need to talk to legal counsel. Because, the only people that can restrict monies are donors, and unrestricting has to come from the donors. But there are ways to do this, but it does require some legal intervention. So sorry to send you off to another expert, but that's really what you have to do.
One other question, how do you recommend accounting for different funds where GAAP and FASB restrictions require presentation of only restricted versus unrestricted assets on the statement of financial position? Do you want me to read it again?
No,
Yeah,
I know
okay.
what you're saying. So you've got a lot of funds that you're tracking and that are important to the parish, but the GAAP doesn't require you to even talk about those. So there are the notes to the financial statement they really belong to the reporting entity. So you can, work with your auditor to put additional notes into your financial statements if you want, because it's important to you. But the best thing to do in that situation, if you want to do it in a public reporting context, there's something called supplemental information that you can have in your audit report. So you can have a supplemental report on your designated funds. Or you can have a report that's available widely in the parish. Maybe it's available through your website, or it's given to everyone at the annual meeting or something like that, where you do spell out kind of the condition of your designated funds, even though they don't appear on your audit report. Okay, ready to keep moving?
Yep.
Okay. Whoops. See if I can, there we go.
So as I mentioned earlier, it's important to be able to provide reports. Not only does it allow you as the person who's managing the funds to have a good understanding of what your funds are, why you have them, and what the intended use of them is, and kind of as part of your day-to-day operations. If you have a ministry person, let's say you have a youth person come in and say, we'd like to take the youth to the park this weekend. It's not in my budget, but we want to do this, whatever evangelistic event. And I need to get like $2,000. You can go straight to your either board designated or restricted and look for $2,000 in a youth fund that can be used for the intent that, for what this individual is asking for, and they can use those funds. So it's good for you to have access to reports and the data, so that you can answer questions and provide guidance to those in the different ministry areas. Also, you want to show your parish and vestry that you are managing the funds, that you know why you have these funds, and that they're being used properly. So it's important for the reports to include additions and releases, as well as the balances that remain. It's also important to do them on a timely basis. So I would recommend, we did them once a quarter for the finance committee and twice a year to the vestry. That also allows the vestry, sometimes vestry members are in touch with different ministry leaders, lay leaders, who oversee certain ministry areas, and they're curious to know how much money they have in that specific fund to be able to carry out different activities that they want to do throughout the year. And the more that those individuals feel that you have a good handle on their funds, and you can show reports where the money is going in and out and how those funds are being used, the more trust develops, right? And then your donors are more willing to provide you with additional funding because they know that you are being responsible. Another key thing is make sure that you document and retain that information, so that if there's turnover in staff or leadership, that anyone can go back and know why this fund was created, its purpose, how long it was supposed to be around, and what the funds were used for.
Yeah, I think depending on who we're talking to, I'm sure many of you have had the experience of sitting at your desk and having somebody walk in and say, how much do I have to do X?
Right.
If you can't quickly come up with that answer, that's, it's hard from a perception standpoint. It's also hard for the various, sometimes we joke that the ownership of the assets of a church are very, very widespread. So people will say, how much is in my account? And we just talked about the fact that there aren't necessarily separate bank accounts where you can just go check the balance. But it is important to make sure you have clear and timely accounting so that you can answer those questions, and people can be ready to respond when something comes up, that's really a tragedy or something that they need to respond quickly to. So our recommendation is, yeah, you review these things at least quarterly, but on a day-to-day basis, make sure that your accounting system can do this for you so that you, as the person getting asked the question, doesn't have to sit and do a spreadsheet for 2.5 hours before they can respond about whether there's enough money to, take the kids on this field trip next Sunday. So you can't emphasize enough that in your accounting system, you got to keep the funds separate so that you can do this, but not at the bank.
I have a question here. It says, if the church receives an unrestricted gift from a deceased donor and their family, can the vestry follow a policy they have established that a certain percentage of the unrestricted funds, can be designated for a certain purpose, such as church's reserve fund?
Yep, you absolutely can do that, but it's not going to stay that way permanently necessarily. That's kind of a typical designation, and it can be undesignated in some ways as easily as it can be designated. So just keep that in mind. In most cases, it's not undesignated easily, and it can be kept over time. I mean, we're talking about short-term nature of designations, but some designations are longer term by nature, and that's fine as long as someone is keeping track of that and making sure that you look at it every now and then to make sure that it still makes sense to have such a designation.
Okay, I've got one other one. Most of our gifts for particular purposes are in wills or bequests. We depend on the clarity of the terms in the bequest to establish use. How does this play out with the statement, donors are the only people who can unrestrict?
Well, I think the question, I think I said that, I answered that in response to the donor is not live, all the heirs are gone, there isn't anybody to ask anymore about intention or about changes that are possible. If you know that the parish has been put into a will of a live donor, that's really the time when you want to make sure that there's clarity. So if they come to you and they say, I'm putting you in my will and it's going to be for youth programs, and that's when you say, would you mind adding some more clarifying language around that, if that's not clear enough, I guess. And then if you find out after the fact that you're in the will, then you would go next to the heirs if you need clarity around that. But I can't, I keep saying this, but you have to be careful with this, and this is a time to consider, talking to legal counsel about what your rights really are to help interpret language that may be vague.
Okay. Okay. So this was an undertaking that Martha and I did together. We partnered on this at the church I was at, and we had a number of funds that were either vestry didn't know what they were for, finance committee didn't know what they were for, we didn't know what they were for, and I thankfully had one staff member who had been there a while, who knew of a church member that had been there a very long time and was able to give us a little bit of historic and information on some of the funds that we had. And so we quickly went about depleting those with small balances and getting them off of our books and using them, the way they were originally intended. Sometimes you can't and you are left with some, but the best way to do is to try to trace back as much as you can any documentation and contact the donor and see if you can reallocate those funds. Again, with the gift acceptance policy, you can use your gift acceptance policy, excuse me, and communicate with your donor to see if there's any way that your funds can be used in a different manner. This is another reason why reviewing those reports regularly is extremely important, so that you can ensure that you keep them accurate, keep the funds that you really need, and start cleaning out those that have small balances that you can use, in the same spirit that the donor gave them to you in.
Yeah, and the other thing that Karen and I went through is, and a very astute finance committee member said to us, we have $650,000 in designated funds and we don't have that much cash or reserves. So something doesn't, it's like we have all these designations, but we don't really have the ability to actually pay it out. So this is another thing that it's good to look at, is if you're sitting on, $5 million of restrictions and designations, you have to think about, how would you actually exercise the intention of those if it were to happen. If you're living hand to mouth, you don't have $5 million to go upgrade the plant. Do those funds really need to be undesignated, and have that be discussed? These are very touchy issues. I don't mean to minimize this, but this is something that's important, that you don't, your designations and restrictions don't outstrip your ability to pay. And, maybe not today, but certainly, if your cash balance has been running significantly lower than that, that's a time to really take a close look at things. So. Okay. You good, Karen?
Yep.
Okay.
So we've thrown a lot at you. You all have had some great questions. And so one of the things we would just like to run by you is, when do you ask for help? So if you realize you have balances that are not documented or understood, you may need a historical analysis. If concerns have been raised on the proper handling of restricted funds, you might need to check in with someone who has the expertise and understanding of funds. If endowments are underwater or not generating sufficient revenue from their original purpose, you might need some expertise to help you walk through that. And if your reports don't tell the story and donors have concerns or questions, you might need assistance with that as well. So that's Chazen and Company is happy to help you with any and all of these needs should they come up for you, or if you're listening to this webinar and thinking, oh dear, we really have to get ourselves together, we need to get a policy, we're happy to help you with those types of things. So towards the end of the webinar, we will share my contact information. I'm happy to set up a time to speak with you. I think at this point, Martha, we're going on to questions, right?
Yeah, more questions.
Yeah. Okay.
This has been great to have questions along the way, though. That's I think it's a lot more valuable when you're able to get immediate feedback. So please continue to ask. We don't have anywhere else we have to be right now. So
yes, we've got another 20 minutes or so left. So feel free to send any questions or any scenarios, that you can think of. So I do have a question here. Just want to run by you. I think the answer is going to be seek legal counsel, but I'll send it out anyway. It says, we have gifts from the early 1900s that are permanently restricted the funds so that only the income can be used for a particular purpose. The purpose no longer exists. What do we do?
Yeah, when I suggest that you get legal counsel, one thing I would suggest before you do this is you try to figure out what all of your issues are that may need legal redress. So you can go kind of once and sort of say, these are the issues that we have, and you can get advice on steps to take kind of in general and steps to take in very specific cases. But yeah, this is when, when there isn't anybody to ask and you've got an old fund like this, I would just encourage you to seek a legal representation about, the steps that you need to take. It could be governed by laws that, are very specific to, where you're operating. So it's just important that you talk to somebody who understands, that this is their business to understand. There's lots of those people around.
Okay, I've got another question. Does the vestry have to accept donor restricted gifts, or is that dependent on a church's policy?
Yeah, no, you don't have to accept a gift. Typically you don't see a lot of gifts turned away, but if somebody comes to you and offers you a restricted gift with something that doesn't, is not in keeping with the way the church, the beliefs of the church or something like that. And that's, again, those are the kinds of things to put into your gift acceptance policy. If you have parameters that, say what kind of gifts that you can accept and what you're going to do with those gifts. But no, you don't have to accept a gift.
Okay, that's all the questions I have for now. Just so you know, I did put the SurveyMonkey link. The EPN would like your feedback on the workshop, and to answer a question, the slide deck will be emailed to all of you that were here in attendance. Let's see. Yes, you will also get a link to the recording. That was also in the questions. Any other questions? We can stay on for another few minutes and just hang out if you have anything pressing that you want to ask us. All right. Is any restricted fund for which you use only the earnings considered an endowment? Does that make sense? Is any restricted fund for which you use only the earnings considered an endowment?
If that was the way that the restrictions were written at the time, if you've chosen to do it that way, that's not a true endowment. But if the idea was that, it was going to do this over time and that came through in the instructions or on the documentation of the gift, then that is an endowment. You can choose endowment-like terms for use of certain restricted funds, but if it's a true endowment when that is part of the restrictions on the gift.
Okay. I have a question about if we have sample reports. I think so yes, we do, but really the report should just be the fund name, starting balance at the start of the fiscal year, all the ins and outs, and then your ending balance for you. I think, Martha, when we did reports, that would be for an internal report. For a vestry, I'm trying to think of how they looked, but we would have the list of all the funds and then the starting balance at the start of the year and then the ending balance, at whether we reviewed them quarterly or semi-annually or annually, right? Anything else that you can think of?
Yeah, so the as Karen described in the internal reports that were used by the finance committee, and I don't even think those, not automatically did those really detailed reports go to the vestry level, but
right.
It's good to have someone looking at the ins and outs in detail, and it's more often the outs. I mean, the ins are pretty simple when it comes to funds. They're usually an additional contribution or there's interest or something like that coming in. But how it's being spent going out, is the fund being used to support personnel, those kinds of things. Those get to be important to people who are trying to manage those funds and kind of figure out how long they're going to last and things like that. So more detail for the people who are really charged directly with the fund management. Certainly internal personnel should be looking at funds in those kinds of detail. And when you get to the vestry level, as Karen suggested by what she did with her hands, you kind of flip the report and you're really just listing the funds and your starting balance and kind of ending balance or starting balance, additions, releases, ending balance. Very simple, no transactional or account level kind of detail on a report like that. And then often on an annual report to the congregation or something like that, you probably are going to roll those funds up categorically. Like you might have youth funds, and that may be 5 different funds underneath there, but the level of detail is less important as you get to a broader base of use. So the other thing is you're not trying to withhold information from anyone, but when somebody's not charged with the management of any of these, or they don't have a fiduciary responsibility for the management of them, the less information you give them, you want to give them the information that's appropriate for the level of information that they need and their responsibility in the process. So don't just use the same report with your parish that you use internally, or that that your pastor uses, or that it just causes confusion, and it causes people to feel like they ask questions that at some level are just too detailed for someone who's not trying to manage the fund.
All right, I've got a good question here. It's my understanding that board designated funds can be reflected on the balance sheet. Can you reflect them in the income statement as well, or is that just a separate report? I know use of restricted funds can be shown on the income statement in a separate column, but designated are not, correct?
Yes, generally not. You treat your use of, if you see funds on your income statement, so you see revenue coming in that's being recognized this year and being added to restricted funds, that'll be in a separate column from unrestricted revenue. But typically you would not see your designations there, because there's ins and outs of designations that come through the designation process itself. So part of the reason that GAAP went away from putting designated funds on the face of audited financial statements is people didn't understand what designations were. And they went to the simplified language of donor restricted. So that's pretty clear. The donor restricted it. And you don't get into what does it mean designated, or what does it mean board designated? What are that terminology? So they simplified the terminology and they simplified the presentation. You can still present special reports that are more detailed than what you would for an audit, but the idea is that you don't want to present information that confuses or just causes more questions, because then your report isn't effective.
Okay, I've got another question. Can administrative costs be charged to a restricted account?
So I'm assuming by administrative costs, you're talking sort of an overhead load.
We'll go with that. And if the person who asked the question wants to give more detail, they can go ahead and send that too.
So maybe it could be that we're actually talking about grants, because grants are actually restricted funds. If we're talking about grants, it depends on the rule of the grants. It does technically depend on the donor's intention, whether you can spread overhead costs against restricted funds. But I mean, I think the idea is that you're consistent. So if you have a donor fund for youth programs and they get charged for the youth pastor, for example, and then you also want to put some overhead there for the space or general office supplies or something like that, that kind of a piece of the whole. I think that's fine, as long as you don't pick and choose which funds you charge that to. You kind of have to develop a consistent policy that if it doesn't say anything, we're going to spread this cost. If it does say something, then you can say we're spreading it generally unless it's prohibited by the terms of the restriction.
Okay.
So you can develop sort of a grant mentality when you're dealing with restricted donations also.
All right, I've got a long one. Are you ready?
Yeah.
Well, let me see what's this one. Oh, this is interesting. Can designated funds be used for lobbying purposes? Government rules? That might be a legal question.
That's something, yeah, that's going to have to be a follow-up question. So.
Okay. We have pooled special purpose funds, smaller bequests with special intent, no requirement to use interest only. We can spend them down and keep them together for purposes of investment. Any expenditures are attributed to individual funds, but revenues are applied on a proportional basis. Any issues with this setting?
That's the way I would do it if it were up to me. So,
So you're doing it right. Yay.
yeah. Yay. That's why you came today, to figure out if you were doing it right.
That's right.
I mean, that speaks to that whole thing of not opening a separate account for every single restriction that you get. Your investment advisors will love you because they'll be able to be more effective when they put those funds together, and they can, they can put bigger chunks of money into investments. You should have better returns that way. You write the rules for the accounting and you do the accounting consistently, and it's not outside of donor intent, then that's great. I mean, that's the best way to do it.
Okay. Any other questions? We still have a few more minutes left. I've put some information in the chat with regards to other webinars that they have coming up, where the recording will be on the EPN website, and the link for registration for the conference in Jacksonville in March.
And Karen's contact information is here also on the screen, and also in the slide deck, it will be there. So she's got a lot of experience in this area, so you might as well try asking her for free advice.
It's definitely a challenge. It's not a fun thing. When I first started working in church world and learning about this, I thought, what? But once you get a handle on it, it's good. I really feel that those reports are key.
For those
So
of you,
go ahead.
For those of you who are still here, let me just tell you a little bit of a horror story in my experience. So,
and then I have a question that somebody asked. I don't know if you want to do that first or not. But
I had a situation with a religious organization, and they actually had funds that were not reflected on their financial statements because they were managed by outside groups within the congregation. In this case, it was a men's fund, but no, I'm not making any assumptions here, but the men's club actually had their own checking account, and they were paying bills out of that and taking donations, and it was not reflected on the books of the church. The men's fund doesn't really have its own existence. It needs to be part of the church. So this is a situation where if you have these things going on, you really need to talk about this long and hard.
So that does bring up a point, Martha. I worked for a Methodist church, and they did have each of their Sunday school classes had their own checking account, and they were using the church's tax ID number. This was set up years ago, and they were using the church's tax ID number and doing the same thing. They were getting money from all their Sunday school class members and writing checks, and it's like managing the church's money off books. And it was like, when we got wind of that, it was like, oh, no. So it was a huge cultural pivot. So, just be aware that make sure that is not going on in your parish. And if it is, how to bring that back into,
I mean,
you
I hate
need to
the
be
idea of
managing
having checking accounts that have one signature on them. The controls are really bad. But if you have what I would call sort of spurious checking accounts like this, make sure that you're expecting a periodic report of a certain type that you're getting from those, and then you are actually putting those funds onto your books, because those are the funds of the church. So a parent giving money to a Sunday school fund is giving it to the church, and I'll bet you they're also reporting it as a contribution. Mm-hmm. You can't contribute to the Sunday school. The Sunday school is not an entity. Now, I understand they're using the tax ID to set up the bank account and all of that, but that needs to be reflected as revenue to the church as a whole. It can be shown, separately as a designated fund, but you can't leave it off the books. That'll just get you into all kinds of problems that you don't want to have.
So I have a question. So this is interesting because so somebody asked, what about ECW, which is the Episcopal Church Women? So I'm familiar with it. And that would be, so I would have to understand if the Episcopal Church Women have a separate tax ID number, and are just a ministry of the church, but operate as a separate entity, then that's for them to manage. But if they are under the church's tax ID number and are truly a ministry of the church and are part of the church, those funds need to be documented in the church books. Right, Martha? I'm saying that right? Yeah.
And it's,
Okay.
and I don't know, I don't really understand, I don't know that organization.
Yeah.
There are also national organizations that may have affiliates that are based at a local church.
Right.
Well, then the question becomes, are those being reported by the national organization, not by the church itself? So the ownership of those is something that you really need to understand and write down. Sorry to sound like a broken record, but so that, you know, upon audit, or if a question comes up, you know, what do I do with this money? Like a treasurer comes to you and say, I can't be the treasurer anymore. What do I do with this pot of money I have, or something like that? You need to understand who owns that money. And it really is dependent on, you know, how that organization happened.
Ellie, if you want to send me an email, my email is right there on the slide. And if you want to fill me in a little bit more on ECW, the church that I used to attend had an ECW and I was not a part of it. But the church I worked for did not. So if you can give me any clarity on that, that would be great, just to understand how ECW is really set up.
Yeah.
We do have a question about QuickBooks and how do you account for restricted funds in QuickBooks? Do you know, Martha, how you can set up QBO to get it so you can track the restricted?
Typically what we would do on QuickBooks is we would use what are called classes, if you're familiar with QuickBooks terminology. So it's essentially departments, and you can have sub-departments also. So you may have a department that's called restricted funds, and then you can have sub-departments under that, or subclasses, to use QuickBooks terminology. If you're already using your classes for other purposes, then there are some sort of tricks that you can do, but they're a lot more complicated in terms of how they're set up. But generally, out of the box, I would recommend the use of classes. And that also makes it really easy to do your reports, because you can filter your QuickBooks reports by class and just produce a report for just that particular fund, or you can produce a multi-column report with all the funds going across the top, and you can do it that way.
So we just got a follow-up. So thank you, Lee, for sharing that the Altar Guild, the church that Lee's with recently, they explained to them that to the Altar Guild and ECW, the funds belonged to the church and needed to be reported by the church. ECW rolled their funds into the church, and the Altar Guild provides a report. So good for you on that. I have a question about if we have experience using Realm for managing restricted and designated funds. And yeah, we do. Yes, that's what we used at the church that I was at. And so Martha was managing those funds for us through the Realm system.
Yeah, but the Realm people or Realm accounting, sorry.
It could be it's in both. It just depends.
Right. Yeah.
You know, so.
Yeah, at Karen's church, we did the Realm people side of it to manage restricted funds, but then also an accounting system alongside it. I think if you use the suite of Realm products, there's no issue doing that. But it
Right.
kind of, they were not using a Realm accounting product or an ACS accounting product. So
Yeah.
If you have specific questions about software and specific church software, we're happy to help with those kinds of questions too, because we do see a fair number of different church packages. So.
So we're at time. It's 4 o'clock. I want to respect your time. So those of you that need to jump off, you're welcome to. We'll hang on for another 5 minutes just in case there's additional questions. We're happy to answer them. And like I said, EPN will be sending, you know, I think they'll follow up with a link. I did put the link in the chat on how to access the slides and to be able to get in touch with us if you need to. Thank you for all the kind words that you all have put on there. We're happy to do this for y'all. I have a question. Yeah, the recording will be at the EPN website. It's also, the link is in the chat. I can repost it, so it's at the bottom and closer to you all for you to be able to get it. It'll be available tomorrow. So let me look. There you go. There you go. Let's see. I believe it's a video recording. It's a recording of what you're seeing on the screen that you'll be able to see. That was a question, if it's going to be a recording or a video. Okay, well, I don't see, oh, wait, I lied. Hold on. Let me see. Oh, that's a good idea. Okay. Someone just suggested that we could consider a webinar on church software managing parish list and for managing finances. So we will definitely consider that. We will be doing another webinar for those of you that are still on in March following the conference, and that'll be on chart of accounts. So we'll talk to you a little bit more about that. Can we hear what the designated use for the funds pre-19? Oh, that's another person. That was about, yes, he was being funny. So we'll disregard that one. Let's see. Danette, I don't know if you're still on, but I'm happy to have a conversation with you about the software if you'd like to, instead of waiting for a webinar, but that's a good point. We'll talk to Joe at EPN about that. Okay. Oh, here's one more. How do you handle a budget item that also is getting designated funds? How do you handle a budget item that also is getting designated funds? Does that make sense to you, Martha?
So
I'm kind of trying.
I think I know what they mean. So you actually budgeted for the item, but you're gonna cover part of the cost of that by using designated funds.
Yes.
One thing you can do is you can have a line item in your revenue budget that's the release of funds, and that would be, so you would budget it as revenue kind of in your operating budget. This is different from your GAAP financials because this isn't really GAAP, but that's irrelevant at this point. You just say, you know, we're going to get this much from pledges. We're going to get this much from using designated funds. We're going to get this much from using restricted. We're going to get this from renting the building. So it's considered a revenue line item. That's the way you do. That's the way you reflect it in your budget. And then you budget the expenses down below too. And they can be budgeted as a use of designated funds line in itself, or they can be commingled as long as you know that, you know, that they're kind of matching up with what's up above in the revenue section. So I think if that's not the question, ask again, but that's my understanding of what you're asking. So
she put yes after you summarized. So I think we did it.
Okay, good.
Okay, any last minute questions before we jump off? So will your suggestion be on the reports? Same person. So that's what you're saying, right? Put it in the reports.
Yeah, if it's an operating like kind of, you know, if it's an operating kind of thing, like maintaining the elevator or something like that, I think you want to put that in as an operating item, but it's, you know, you really have to reflect the revenue also, so it washes is the idea. But I think otherwise it distorts sort of the picture of your operating expenses if you don't include it. So.
Okay. Well, we're down to 13. 13 survived till the end.
Lucky
Any
13.
last questions? Yes, lucky 13. Any last questions? If not, I'm going to go ahead and sign this off.
Thanks for your attention, you 13. 10, it's gone down.
Yes.
All right.
Well, thank you all. It was great. And we really do appreciate all the questions. And like we said, you know, feel free to reach out and we'll be happy to answer any questions you might have. So have a great rest of your week. Bye-bye.
Bye.